forget broad indexes and traditional value stocks, because this lab experiment of a fund is redefining what ETFs are and what they can offer investors. And it introduces a whole new level of risk reward. Welcome back to another video covering one of your favorite topics today, ETF or exchange traded funds. Please drop a comment if you have any thoughts on this ETF or suggestions for what I should do in my next video, and like and subscribe if you enjoy the video. So as you may know, I'm personally not very big on ETF. In fact, I don't hold any in my personal portfolio. I rather pick individual companies. But if I had to pick one, I'd probably go with ARKK or ARK Invest's ARK Innovation ETF. Hopefully I'll get around to do a video on each of their ETF, but I'll just start off with this one. So this market beater of an ETF is Catherine D.Wood's brainchild, if you like, of an ETF. It's all of her favorite companies combined in one. So it's sort of a mishmash of all the ETFs combined. And it holds small to medium-sized companies which are disruptors and driving innovation in key areas like genomics, automation, fintech, and 3D printing. And the average market value of the top 10 companies is a mere 43 billion, and the median is 15. And the only fairly large companies are Tesla, Square, and Illumina, which all three can be good individual holdings if you don't want to buy the whole ETF. And of course, these are all Catherine's favorite companies. And I think of their ETFs, I think this is their best option, because it gives you exposure to all of these different exciting spaces without having to hone in on one, right? So instead of just investing in genomics or just in 3D printing, which are quite risky bets, you can buy this one with a little bit of everything. Now, other notable names further down the list are Spotify, Pinterest, Splunk, Xilinx, TSM, Snap Inc., Twilio, and Autodesks. But these are mostly sub 3% holdings, so they won't even move the needle for the ETF. Now, this ETF is quite small. It only holds 41 companies. Most ETFs hold hundreds. And if you add on top of that they're quite top heavy, this is definitely a very risky ETF with big swings in the price. But I think it offers a very attractive risk reward. And a top heavy, small, concentrated ETF is not most passive investors' cup of tea. But I think this offers actually quite an attractive risk profile. Now, it's worth noting, however, the 0.75% expense ratio, which is 25 times higher than Vanguard's VOO S&P 500 ETF, sitting at 0.03. And this means that if my calculations were right, ARK Invest's ETF has to beat the S&P 500 by 21% over 30 years to make up for that 0.75% fee difference, or 0.72. Now, I think this is highly likely to happen, but it's worth noticing. And so the expense ratio sort of increases the risk of the ETF even further. But despite this expense ratio, it has been one hell of a run it has had. And Catherine D.Wood and her team has shown that betting big on innovation has paid off. And since 2014, this ETF has really put the S&P 500 to shame with its 25% annual appreciation compared to the S&P 500's mere 11% during the same period. And even in 2020, despite the market turmoil, ARK Invest is up 40% year to date, not since the low, year to date. While the S&P 500 has done nothing like that. I think it's more like flat for the year, which underscores Catherine's point that betting big on innovation and innovation in general seems to accelerate during bad times as big, slow-moving companies fail to invest in these crucial bad times. Now, of course, the main propeller behind the ETF as of recently, and this is just an example of how it's such a top-heavy and risky ETF, is of course its largest holding, Tesla, which makes up more than 10% or exactly 10% of the ETF. And Tesla has surged 1,200% since 2014, actually forcing Catherine to sell many of her Tesla shares in this fund to keep it below that 10% threshold. Now, of course, just as easy as Tesla pulled the ETF up, it can pull it down. So this really underscores the risk of the ETF. I personally find the fields of innovation that this ETF hones in on to be very interesting, and are fields where that can create exponential revenues for the companies within them. So 3D printing, automation, and genomics can all uproot our societies if widely adopted. I mean, can you imagine people dropping banks for a peer-to-peer payment system, or a 3D printer able to print anything, or being able to manipulate and predict genomics patterns, meaning we could create perfect human beings and eradicate diseases? And although betting big on innovation, this ETF is by no means like an all or nothing scenario. You know, big changes like genomics and 3D printing takes a long time and is usually made up of many small changes compared to like a light bulb moment. So these things are not going to take off overnight, but they're exciting areas nonetheless. ARKK checks many of my personal boxes for ETFs that I might consider investing in one day. It's concentrated, it's top heavy, and it has a high risk reward ratio. And it can allow me to invest in all of these exciting areas of innovation in which I have no clue about what's going on. And I encourage everyone to go over to ARK Invest's website, where they put up a lot of their research in the form of podcasts, research papers, videos, articles, and webinars. This is unlike most ETF providers. So you get an inside look of why they're investing in these companies and what sort of developments are going on within the industries they focus on. So have a look, go over to the website, let me know what you think. And I'd be very interested to hearing from any of my viewers who are investors in individual companies within these ETFs. And please let me know why you think that company is a winner. Because again, I prefer picking individual companies before ETFs. And as always, drop a comment with any suggestions for my next video. Stay tuned, and until my next one.